Welcome back to Cheddar Shakers, everyone. Investing app Robinhood is facing heavy criticism after experiencing its third outage in the past 8 days and amid rampant market volatility. Robinhood investors partially missed out on the best day in the Dow's history, with the index rising nearly 1,300 points. Investors were also sidelined the next day when the Federal Reserve cut interest rates and it tumbled nearly 800 points. And then on Monday of this week, for part of the day, Robinhood traders and users there were unable to buy the stock when the Dow dropped more than 2,000 points. For more on this, we're joined by Pauline Bell, Equity Research Analyst at CFRA Research. Pauline, thank you so much for joining us here on the day. Can Robinhood recover from those colossal errors?
Well, Brad and team, it's been a very challenging week for Robinhood. There's just no sugarcoating. I think at this point, Bernie Sanders had a better track record. So we do feel that this will negatively affect their valuation. In this world, trust is paramount because trust is paramount because this is what you have to have in order to continue growing your user base. Otherwise, their trading platform is not seen as reliable. And that's actually a boon for their competitors like Schwab and Ameritrade. I mean, they can say, yes, we are all reliable, but at least we are reliable.
This was the great disruptor, right? This was the company that came out, it attracted millennials, it made the incumbents nervous. And in the wake of Robinhood's launch, we saw a lot of companies drop their fee structure. Does this now mean that Robinhood is going to hemorrhage users and they're going to go to the tried and true incumbents?
Oh, absolutely. We think so. Yes, Robinhood was a definite disruptor for the industry when they offered free trading back in 2014. But now that advantage has been completely taken over by the incumbents. The price is no longer a differentiator. So to me, what does that stop Robinhood's current user base to switch to more established players? Well, there's not much in the way for them to switch their accounts, especially as they grow and their investment base increases. You know, Robinhood appeal is mainly to millennials. Their user base age is about 32 years old. The industry calls them the Henrys, high earners, not rich yet. But think about it, as those users become more wealthy, they will probably switch to a more sophisticated platform. So for Robinhood, it is essential to make sure that the user base is sticky. So the current outages that they had does not help in that perspective at all.
Pauline, just to jump in here, the user base, you've also got a subset of them that are suing Robinhood, and in what is turning into a group of users going up against Robinhood, saying that their platform errors actually led to them experiencing financial detriment. How much of a case do they have? And then how much does that impact somebody who might want to acquire a Robinhood?
Well, again, definitely there's going to be some cost to the company. Yes, they're lowered up. There's a clause in the agreement saying they cannot guarantee access to their platform at all times. But the hidden cost is actually to their reputation. And I feel like this exceeds any monetary damage to the company. Because again, this will question Robinhood's ability to grow their user base. And someone like Goldman Sachs, who is trying to corner the retail market, or someone like, let's say, Interactive Brokers, well, to them, what's attractive about Robinhood is their ability to grow their user base at a much low cost. I mean, they do have an advantage of this word of mouth. This is how they get new users. Well, now that's completely in question.
Pauline Bell, Equity Research Analyst at CFRA Research. Thank you so much for taking the time to join us on this.